I find it very interesting that people want to make startup investments on their own because everyone feels that they have the
Can.
ability to evaluate a startup, and everyone because they themselves have been, let's say, doing a business or running doing a job, and they feel equipped that okay we can evaluate it, but it's not so easy.
Adith, welcome to Money with DD. I am so excited to have you here. We've had financial advisors come here before who've managed hundreds of thousands of crore. We've had Neil Borate, who is head of personal finance at Mint. So he comes from journalism, from stats point of view of how personal finances in India work. But today's topic is about the sexiest asset class within the Indian space, which is startups. How do you get started in investment in startups? At what net worth should a person think about investing in startups?
No, I think it's a very good question. Firstly, thank you for having me over. Startups are part of an alternative asset class, right? Which essentially means higher risk and higher reward. When you start building your net worth, the first kind of investments you would do is slightly on the safer side, which could be a debt or an FD. And then you move to public market equities because there is liquidity. And then eventually, you have a percentage allocated towards alternative investments. Now, that percentage could differ from people. Someone, to 5% of your overall net worth could be going up to 20% also. The idea there is if you lose that money, it doesn't change your lifestyle at all. Once you're confident about that, that's the time where you should start investing and looking at this asset class to get that alpha on your overall portfolio, right? And also because this asset class is not correlated with public markets or any other markets. So it could happen that your portfolio in one asset class is not doing so well, but the other portfolio balances it out, right? So that's where you should start looking at it. There is no one number in my mind because what happens is if you have access to the startup ecosystem and you've been there, even at after 5 to 6 years of work experience, you can start putting small money because your friends are in the startup ecosystem. They started something whom you kind of want to invest. But if you are a complete outsider, right, and you just want to invest in it, I feel that is a time where you should start when you are sure that you could invest at least in 20 to 30 startups. Don't start when you feel that okay this is hot and let me invest in 5 startups and see what happens. That's the worst thing to do. You start investing when you know that you have the ability to invest in a portfolio of 20 to 30 startups. Could be over a period of 4 years, 5 years, but that's I think the point where you should start thinking
Brilliant. I loved a few things which I'm just going to summarize very quickly. I believe, the net worth, and I've written about this, the net worth should be roughly between 20 to 30 crore. If you don't know anything about the Indian startup ecosystem and you don't know how startup investment returns, the game of
correct.
VC, right, venture capital, how does it work? If you don't know, 20 crore, 30 crore के बाद 5% of your net worth can go into
Sure,
startups.
sure.
And then why 20 crore or 30 crore? The simple analysis is invest in about 32 startups over 3 years, around 10 startups a year, and invest about 3 lakh to 5 lakh rupees per startup. And hope that over 7-year period, you get about a 3x return.
Correct.
Right? And so those are the numbers. I really liked what you said, which is this is the money that you could lose and it should not adversely affect your lifestyle.
Yes.
I think it's very important to say that, right? It's not gambling. It's
Yes.
not a casino. One addition I have to that is no matter who tells you कि ये startup तो पैसा देगा ही, right? You should stay away from such an investor.
Yes, yes.
Because nobody
Absolutely.
knows, right?
Nobody knows. Even the VCs don't know, and you'll be very surprised that even the founders don't know whether it's going to be successful or not, right? So the guy who's driving it is also not sure about it. So it's very difficult for you as an outside angel investor to kind of be very sure about any particular startup, right? And that's why you need to have a minimum diversified portfolio on the startup ecosystem, on the startup, because these are very illiquid assets, right?
Yeah.
It's not under your control when you will exit. And that's the reason why a certain portion of your portfolio which you are okay to keep it illiquid is what you can probably invest.
Yeah, and
If you feel
said,
you would need that part of money anytime later in the future, then don't do it, right?
yeah, it's not like a FD, right?
Exactly.
और पब्लिक मार्केट में शेयर
Absolutely.
खरीदा है, उसको बेच के लिक्विडिटी आ गई है.
Absolutely.
स्टार्टअप में एक बार पैसा गया तो
Correct.
यू माइट नॉट गेट इट. आई जस्ट हैड माई फर्स्ट एग्जिट
Oh,
from my
congratulations.
startup investment,
Yes.
just to give the audience a view or a taste that are you okay where you invested money and you don't hear anything or much about what's really going on a day-to-day basis for 4 years, right, or 3-year period.
Yeah.
And then I've had a couple of startups that I've invested I've had to write off
Correct.
the investment
Correct.
because they could not survive pandemic.
Correct.
So that amount is gone.
Correct.
And the losses come before the wins.
Correct.
How should they approach getting started in startups?
See, if you are not part of public market equities, how do you invest in equities? You invest either through a mutual fund or a PMS.
Correct.
Basically, you are letting the professional do its job. Despite having access to all the data easily available, despite knowing every quarter what's happening with the company, and despite having the liquidity that whenever I want to exit, I exit. Yet you believe into an expert to do it, right? Why is startup investing different, right? In fact, here the asset class is even more illiquid. It's non-transparent. You have to do a lot of diligence, and you need to be in touch with the company to understand everything. And this is something which you want to do it on your own. So I find it very interesting that people want to make startup investments on their own because everyone feels that they have the ability to evaluate a startup, and everyone, because they themselves have been, let's say, doing a business or running doing a job, and they feel equipped that okay, we can evaluate it. But it's not so easy, right? Especially over a longer period of times to make money on that. So my suggestion would be to start off with, let's say, the angel groups or the syndicates, but eventually, look at letting the professionals do its job. Consider it as like any other asset class, and then let the professionals do it, because it's very sexy to say in meetings and in social gatherings that hey, I'm invested in this company, I've invested in that company. But in the end, are you going to overall make money or not, right? That's what you would want. You might get lucky, but I think it's, my personal opinion is, unless you are glued to the startup ecosystem, don't do it, because the deals are also something which you need to source.
Yeah.
It's not that they are all available for everyone, right? And as an angel, you might get deals which are rejected by the VCs. Let's put it that way sometimes, right? So you're, as it is, having an adverse selection bias.